My name is Dan Murphy. Thank you again for joining us. I'm coming to you from CNBC's Middle East headquarters here in Abu Dhabi tonight. Wherever you are around the world, thank you for watching, and I hope this next hour gives you a window into the kingdom, the rapid development of the capital markets there and around the region, and the big opportunity that this presents for domestic and international investors. I think reflecting on my own experience over the past few years working in the region, what we've seen here in Saudi Arabia in recent years is deep and compelling market reforms. And this is, of course, evidenced by the G20 Capital Markets Development Conference, which was hosted in January. I had the privilege of being there in the kingdom to attend and interview the central bank governor about a lot of these issues. And the overwhelming message that we heard from him and others at that conference in January and in recent years has been that this modernization and this liberalization of Saudi Arabia's capital market is certainly driving rapid change at an economic and at a societal level. And this is one of the most exciting stories in the region and the world, I would contend, today. So I'm very pleased to introduce our expert panel. Here to discuss tonight is Khalid Al-Hussan, the CEO of the Tadawul. Khalid joined me on CNBC just a few weeks ago to announce the launch of the derivatives market, and I'm very excited to continue the conversation here tonight, Khalid. So thank you for joining us. Abdullah Binghannam is from the Capital Markets Authority. He's deputy for listed companies and investment products. Abdullah is, of course, well placed to talk to us about the maturation of the market and some of the regulations and regulatory challenges in that journey. So welcome, Abdullah. Rajiv Shukla is also here. He's CEO of HSBC Saudi Arabia. And Rajiv can give us some insight into the significance of the equity derivatives launch from a global bank perspective, and in particular, what Insto clients might be looking for. Waleed Fatani also joins us tonight. He's CEO of Saudi Fransi Capital, which has been engaged with the Tadawul for well over a year now, I think, to develop the derivatives market. And he's got a great perspective on what it's going to take to make this market thrive through a retail lens. And we're also very thrilled to have Vikram with us tonight. He's CEO of the National Stock Exchange of India. The NSE, of course, ranked #1 in derivatives globally by Vol last year, and it continues to outperform. So Vikram, looking forward to talking with you about that. And also, I want your thoughts later on the pace of the global economic recovery as we navigate the pandemic impact too. So welcome to you all. Khalid, of course, I'd like to start the conversation with you. And as I pointed out earlier, for several years now, the kingdom has been executing on this goal to develop a deep liquid capital market that can attract foreign investment and regional listings. So let's start tonight by asking the most obvious question: why a derivatives market? Why now for Saudi Arabia?
Good, Dan, and a pleasure to be here today with the distinguished guest. And I hope this session will benefit the audience. We started 3-4 years ago a big transformation where we had promised to deliver significant deliverables to the Saudi capital market, along with our partners, the regulator, the exchange members. This is a continuation to development of the Saudi capital market following the opening up the market and inclusion in the main emerging market indices. It's the next step to provide a more deep offering to especially institutional and high net worth individuals or investors who deeply participate in our market. And that's why we started with the MT30 index future contracts, which will be launched in a couple of weeks at August 30th, as the first start for introducing such product that help investors to hedge their positions, as well as deepen their investment routes in the Saudi market with comfort about the standards we have.
Khalid, what type of response have you seen from the international market since you announced the launch of the new derivatives market? How has it been received so far?
It did receive positively from the international investors. We have been talking to international investors over the last 18 months about our next coming initiatives. Derivatives is what we wanted to deliver, and here we are, alongside with activating a well-established clearinghouse for the first, I would say, well-established clearinghouse region. And I think we decided to do this in a more standardized way that the international investors as well as local institutions are familiar with when it comes to managing clearing risk on future contracts or on derivatives in general. So we have been very busy to design the proper operations, technologies, as well as regulations to make sure whatever we offer in the Saudi capital market are common standards for local and international investors.
I'd like to bring Rajiv into the conversation as well. Rajiv over at HSBC, how significant is this from the HSBC perspective as a global firm? I think it's particularly interesting to look at this through your lens as well, particularly with this focus from a global perspective. What impact do you think that the launch of the derivatives market is going to have on the Tadawul's cash equities market and volumes, in your view?
Okay, thank you, Dan. That's a lot of questions in one, but I shall start off. I'll give summary answer, and you can pick up on whatever themes that you'd like to follow. But first of all, it's a pleasure to be here. And to start with, I would like to commend and congratulate Tadawul, as well as the CMA, for driving the incredible evolution of the Saudi market and making some very important changes in line with their objectives and in response to the investor and broader stakeholder feedback, which continues to be made at pace, even notwithstanding the current COVID environment. I think some of the things that have been done in recent times are truly remarkable. The equity index inclusions in record time were a big feat, proving the market capability by handling the world's biggest IPO and other. And of course, the launch of the derivative market is another very significant milestone in what we too consider a very fast-paced development of the entire market, and for a market which is actually already pretty big and significant. We and our associate Saab are very committed to Saudi Arabia and will remain involved and continue supporting all key strategic initiatives, indeed all those under the Vision 2030. But coming down to your specific question, this is indeed very significant, and I think we can say that confidently because we should know, given our global footprint and existence in major financial hubs, as well as particularly in emerging markets. And especially in emerging markets, we participate across most of the derivatives value chain, across trading, settlement, clearing, helping market participants discover correct and fair pricing for derivatives, and the variety of the activities. I think everything that we are seeing right now for a market that is very big, very significant, points to the direction this is a significant step. Saudi Arabia, given its scale and size, is likely to be an even more dominant market in the region and is well placed to be a regional leader in the derivative space as well with this development. I think on the investor side, I can elaborate a little bit more. We do see a lot of queries, a lot of demand, and indeed, as Khalid said, there is institutional investors have been looking for the broadening and diversification what this particular instrument does. It will be complementary and it will actually support the cash market as well. And I think for all those reasons, for all the right reasons, this is indeed a very significant step. And of course, the Tadawul and the CMA continue to drive on regardless.
Rajiv, what are those clients asking? What are those big institutional clients coming to the firm and requesting? What are their interests in at the moment? I just wanted to get a sense on the ground of what you're hearing from those investors about the launch of the market and about the opportunity in Saudi Arabia today.
Well, first of all, as most of us would know from experience, futures are typically used by investors and traders as a hedging tool for one, risk management, two, for arbitrage, or three, for speculation. and all of those elements contribute to liquidity. With the recent equity index inclusions, the ownership of international investors had increased significantly in Saudi equities. And as you probably know, foreign investors own over 12% of the free float market cap, amounting to nearly $50 billion US. Many, although not all of these investors, have expressed the need to be able to risk manage their positions, or otherwise to be able to tactically take positions, and are looking for this instrument to achieve precisely that. So with the launch of index futures, many investors that hold large portfolios then subsequently hedge that position, gain downside protection. And of course, there will be investors who will be interested only in trading in the instrument. And I think the market will, of course, cater to that as well. One should also look at it from the alternate channels lens and the viewpoint of strategic versus tactical holding. For example, large index funds indexed to the market want to have the option to either hold the shares of the full market because they are required to do so, but that is cumbersome, or to hold the shares of an ETF tracking that MT30 index, and both of those would be strategic holdings, or otherwise to more tactically enter through investing in index futures. As you know, index futures are generally more liquid and can be, and actually are accessed just through margining. And investors prefer more liquid access, especially at times when liquidity is in other channels is low and there's volatility. So that's the kind of feedback we are getting and we are supporting in terms of those investors.
Excellent, thank you. Waleed, I thought I might ask you the same question as well, because I know you over at Saudi Fransi have been engaged with the Tadawul for over a year to develop the market with a particular focus on the retail equation. Do you think there is perhaps a lack of awareness on the retail side, or perhaps some hesitation when it comes to the uptake of derivatives in this market in particular?
Yeah, thank you for inviting me to be here. Thank you for this distinguished panel. I think the maturity of this market will come only through a wider range of participation. Namely, retail is one of them, institutions, foreign and local. It takes a lot of, I would say, participation in the market to bring this to fruition. Tadawul and the CMA have done a tremendous work in bringing the platform and the regulation and the framework for this to happen. And yes, derivatives come with the stigmas, particularly from a retail investor's perspective. It is a very important and viable tool for risk management and for speculation, and to allow market discovery positioning for all the participants. But the education part is really important, and we've been engaged on various fronts with Tadawul and directly with our clients to bring this knowledge and this information to the forefront. In my opinion, and maybe and you see it in history in other developed markets, this is a very important and significant step. But I think for the flows to come in, and you'd see with a lot of emerging markets experience, the building blocks have to be complete. Now we have the futures industry. Tadawul is bringing a new platform onto the table and probably be executed in first quarter in 2021, the PTTP. This will give a lot more ease to the securities and securities lending and borrowing, securities borrowing and lending, allowing short selling to be more smooth and more, I would say, efficient than currently it is today. I also, with the other tools coming into play, I think we'll give a lot more depth and liquidity to the futures market that we're embarked to launch today. It takes, I would say, time, and the Indian market, maybe our colleague would probably comment on that. The Indian market took time for this evolution to come into place. And I want to draw parallel to the Saudi derivatives in the market today. I mean, derivatives in the Saudi market hasn't been in existence since the mid-90s, and probably we're earlier than that. I've been lucky enough to witness its evolution. They are a very significant and important tool for the development of the financial sector. Liquidity comes through market participants, and the prime makers of this liquidity are market makers. market makers, and this is something maybe the CMA can comment on from a regulatory point of view. You need to put the framework in place to ensure that enough participation from market making perspective comes in. With market makers, you develop the necessary depth and breadth for this market to take off. And today, if you look at their impact, is probably known and well known in the financial sector, but not readily known in the larger community. It has led to significant advancement and in profitability and in efficiency from a capital perspective for the financial sector. Banks can now benchmark very easily the risks against these derivatives. Government curve also from bond issuances and corporate bond issuances also wrap around this derivative market to bring the market all together, enhancing the debt capital markets, enhancing bank balance sheet management capabilities, and giving effective tool for capital consumption. So going to the equities market, it is just as a major milestone as this happened over the counter market. This is more of a regulated framework, but the key is bringing the participants together. I don't anticipate to see a lot of liquidity on the onslaught, as there will be a discovery phase to understand the depth and the breadth of the market. But with time and with the additional tools coming into place from securities borrowing and lending and short selling, it will complete the cycle, and you will see liquidity emerging from short contracts initially till you go to the last contracts. But initially, I'll anticipate a discovery phase. But indeed, this is a very important development for the market, and we're all happy and very excited for it to finally arrive. We've been excited at the beginning when we've been very engaged with Tadawul and the CMA to bring this to the market, because this is something that will unlock a lot of liquidity and bring a lot of efficiency to our market.
Waleed, I couldn't agree more, and I think you made a really interesting point there on this question of liquidity and improving liquidity in the domestic and regional markets. That's something we can talk about in just a short while. But I also wanted to bring Abdullah in now from the Capital Markets Authority, because I think you'll have an interesting take on some of the commentary that Waleed just made there with regards to the uptake of derivatives, particularly in that discovery period that he was talking about. Waleed mentioned that derivatives are a useful tool, but perhaps they're seen by some as risky and speculative, especially for investors who are perhaps less sophisticated than others. Abdullah, do you have a view on this? And is this something that the CMA has had to address?
Thank you, Dan. Thank you for having me. Thank you for the distinguished panelists. Actually, it's a very important challenge that regulators always look at for any new product, not to mention derivatives, and not to mention that the market has been always a cash market in the Saudi market, Saudi capital market. So the derivatives market are newly introduced, and definitely the investors' protection is one of the pillars and the mandates of the regulator, as well as the responsibility of the market participants. So if we looked at, when we looked at the regulatory framework, it depended on which category of investor we are considering. For institutional investors and international investors that are very well familiar with such a product and very well familiar with the practices globally, they know the product inside out, and the challenge was to make sure that the framework and the products are very well consistent with the global practices. Whereas to the retail and individual investors, the product is newly introduced to them, and not all of them with all different categories of the individual investors are very well equipped with knowledge for the product. So in addition to the usual process of raising awareness for any new product, for derivatives, there were two different layers additional for retail investors in the regulatory framework for the derivatives. One was for the additional initial margin for retail investors, which is twice the initial margin for institutional investors. And this is aiming for reducing the multiplier effect or the embedded leverage in entering into such a product. The other layer is the suitability test required by the brokers and dealers that are going to enable the individuals to enter the products. So for the derivatives, there are two additional layers for the retail investors to participate. And this is actually trying to raise the awareness of the retail as they enter to the new derivatives.
Abdullah, just on that, do you think in the future we're going to need to see perhaps more changes at a regulatory and infrastructure perspective to expand this market's appeal to foreign and domestic investors? Maybe you can weigh in on that. And Khalid, you can also weigh in on that question as well, if you like. Abdullah?
If we put into perspective the overall journey of developing the markets toward opening up for international investors and opening up toward more diversified products, I echo what Khalid mentioned a few years ago when we took the burden of developing the market. The market was a domestic market with daily focus on cash equities. And along with launching the Vision 2030 for the country, the development took different levels and on different categories, one of which is the access of international investors, which started for direct access in 2015 and developed all the way till now. And over the journey, the country was introduced and admitted to the leading global indices in unprecedented pace and hosted the largest IPO in the globe, Aramco. Along with that came a development in the market infrastructure, and again, in unprecedented pace, the market infrastructure migrated from T+0 to T+2, which was a successful migration. Along with that came development with different products. The fixed income market now is in excess of $100 billion, and the ETPs, including ETFs market, developed rapidly with wider range of asset classes, fixed income, commodities, in addition to the conventional equities. We're talking also about REITs and different services, including short selling and SPA. What's coming is to improve if we look at the journey of development, it has two sides. First, enabling the projects, enabling the market participants, and in parallel to that, to continue on improving and reforming the regulations as to add the flexibility where needed and improve the governance where needed. We are continuing on the second part, which is further and improving the governance, and not to mention the additional, the recent changes in the company's law and the investment fund regulations, offering of securities regulations, all to make the balance between enabling and improving governance. Toward the international investors' access, today we are working on improving the access of international investors to the fixed income and easing access further. And of course, we are always keeping close relationship and partnership with all the participants to make sure that the access and the availability of the market is as needed and expected to serve the needs.
Thank you, Abdullah. And before I bring Vikram into the conversation, Vikram's been very patiently waiting in the wings. I just wanted to give Khalid the opportunity to also answer that question, if you like, Khalid. What changes do you think might need to be made in the future to make the market more appealing to foreign and domestic investors?
I think, as Abdullah mentioned, and to complement what he has said, we have been and will continue to be carefully listening to the market demands, whether this is a local or international demand. And I think since 2016, 2015, 17, we have proven the case of carefully listening to that demand from both sides, international and local. From an international perspective, I think looking at the QFI framework, several versions have been in place just for the sake of making sure that what is implemented in the Saudi market, one is common standards, second is a tested standards. So we are a patient capital market who listens carefully, but want to make sure that whatever we do it right. And I think that's the principle and the base we use. As far as for local developments and demand, as Abdullah mentioned, big developments in real estate funds, REITs, the introduction of the SME market, which has gone through several routes of easing regulations to make sure that the market is ready for. And I think we are adapting the same for derivatives. We're going with the most basic to understand the derivatives product, which is the index futures. Will be followed by several offering once this product is tested, well educated, as Waleed mentioned. It is a journey. You need the local demand to help also making sure that this product and this market is mature. And I think from the perspective of international investors, one of the key attractiveness of the Saudi market is the demand, the local demand of our local investors. And as much as we want to attract and compete over international capitals and international listing, we want to make sure that we continue to grow our local demand by offering suitable products, suitable regulations that suits both parties.
Khalid, thank you for that. And Vikram, welcome into the conversation. Thank you for being so patient. And bring this home for us. Give us the international exchange perspective, because the Indian derivatives market has come such a long way over the last 20 years, and it's a global leader in the space. A two-pronged question for you. First, what type of volumes are you seeing today versus peers? And to perhaps a bigger, broader question, what can Saudi Arabia and the region learn from India's example in the establishment of this market?
Thanks very much for having me. And once again, my best wishes and congratulations to Tadawul, Khalid, and the CMA for launching the derivatives market in Saudi Arabia. I think the Indian experience would indicate that patience is something that is essential in growing this market. I mean, we started the derivatives market in 2000, and actually we started the awareness surrounding derivatives almost 3 or 4 years before that. And for the first few years, obviously, it wasn't great in terms of the build-up in volumes and the way the market developed. But it's a long haul, so you have to be patient, and you have to make sure that you put in place all the right building blocks for the development of the market. And from an Indian standpoint, the few things that actually worked well for us was the fact that we had a clear and stable regulatory environment. We picked simple products and products that were suitable for the domestic environment. We started with index futures, the way Tadawul has started as well. And even now we have very simple products. I mean, we don't have exotic derivatives at all. The other thing that we did as far as the Indian market was concerned as it relates to equity derivatives is that we did not actually have an OTC market. There is no OTC derivatives that's permitted in India. Everything is exchange traded. So it is obviously a lot more difficult. And we know that, for instance, in the United States, there is a very large OTC derivatives market. In India, there is no OTC derivatives market, and it's all exchange traded. That gives you, the best liquidity and price discovery. And we were fortunate that we were able to get the derivatives market on the exchange. Risk management is exceedingly important, and in order to develop the market in a disciplined way and to build trust in markets, your risk management really has to be good. And the risk management framework in India, again, is very stringent. And we actually have gross margining at the client level. So real time gross margining at the client level. So it's not actually, when I look at some of the developed markets, they don't have it either. So we put in place very stringent risk management right from the beginning. And that has actually stood us in good stead through volatile times, through the financial crisis, through this COVID period, through any kind of crisis over the last 20 years. We haven't really had any kind of clearing and settlement failure at all in our markets since we started this market now more than 25 years ago. So I think that is another thing that has helped us. And then our awareness program is also very extensive, and it continues to be a very large program. And that's one thing that I would say, any market that's launching a new segment such as derivatives, a lot of hard work has to go into building awareness about the market, about what derivatives are, to make sure that your intermediaries are also actually trained and are equipped to deal with the market and to deal with their clients. And in India, the unique aspects about the Indian market is that we have a very large retail component. And therefore, we have to be careful about making sure that there's proper awareness and product suitability, that the intermediaries are making all the right disclosures when they're registering clients for derivatives, the financial wherewithal, understanding of markets, all that is built into your disclosure documents. So a lot of that has to be done in order to make sure that it's a sustainable market, because otherwise what will end up happening is people have a bad experience. It will just harm the future development of the market. So you have to do it in a disciplined way, and you have to be patient about it. But I think certainly Tadawul and CMA and Saudi Arabia are on the right track, and I'm pretty sure that from everything that I've heard, everything that I've spoken about seems to be part of the plan in terms of how the derivatives market in Saudi Arabia is developed. So again, my best wishes to Tadawul and CMA in developing this market.
Vikram, I also just wanted to indulge, if I can, and just pick your brains, as we say in Australia, to understand what's happening in the global equity market right now, because I think you would have a very interesting perspective on this, right? Equity markets worldwide, seem to be shrugging off this macro downturn that we've seen in the first half. Everyone is very focused on liquidity right now. For bank liquidity, it's everywhere. Does that concern you? Are you concerned about the disconnect that we're seeing right now between macro fundamentals in various economies around the world and how equity markets seem to be performing as a result?
Yes and no. Yes, because I do believe that this is largely liquidity driven, and the point is that when you look at the underlying growth in any of these economies, whether the developed economies or the emerging markets, really nobody knows, how these economies are going to grow over the next 12 to 18 months, because there's just so much uncertainty surrounding the impact of COVID. And obviously, the impact of COVID is different for different industries and different for different geographies and different for different economies, depending on how you're positioned. And so it is a very uncertain world, and nobody really knows how it's going to develop over the next 12 to 18 months. So from that perspective, it does appear that the markets don't seem to be connected with the ground reality and the uncertainty that actually faces most economies in the world. At another level, the reason I say no is because in many markets, the index is not really an indicator of the broader market in terms of what's actually going on in terms of valuations and stock prices in the broader market. Because, these indices are largely driven by a handful of stocks that have done exceedingly well. Even if you take the NASDAQ or even if you take the Nifty, the FANG stocks are driving, I would argue, based on some of the data that I've seen, 50-60% of the return on the Nasdaq. Okay, and then the rest of the stocks are obviously the valuations and everything is quite different. If you look at the Nifty in India, it's again driven by a handful of stocks that have really appreciated quite a bit, but it's not necessarily reflective of the broader market. If you were to take what's going on with 500 other stocks, you would find that valuations in the mid-cap growth companies, etc., haven't really necessarily reached the kind of levels that you would assume if you just looked at the index. But it does worry me, the fact that there is just a lot of liquidity, and that is going to find its way into equity markets, particularly because in most parts of the world, the fixed income returns are exceedingly low. So where do you put your money? If you have zero to negative interest rates, fixed income is not necessarily an attractive asset class. So what we've therefore seen in India as well, as yields have come off and as rates keep going down, there is more money flowing into equities, and actually you're seeing money flow into gold as well. So it does worry me that there is a lot of liquidity that is necessarily going to find its way into the equity markets because other asset classes are not necessarily as attractive from a returns perspective. And the fact that the underlying uncertainty surrounding growth and how these economies are going to work out over the next 12 to 18 months is exceedingly uncertain. And so from that standpoint, the overall market multiple is not really reflective of what the underlying earnings growth could be or what the GDP growth could be in any of these economies. So it is a cause for concern.
It's interesting because we speak with global investors on CNBC every single day of the week. And just to explore this topic a little bit further, some worry about this idea of a stimulus taper tantrum. Of course, we're going to have to see governments winding back some of the measures they've put in place to rescue their economies. Some are concerned that that is going to lead to a fiscal cliff, perhaps. That's one risk that's been identified as a key risk to the outlook for global equities. In your opinion, what are some of the other key risks? Are there any black swan events that you see on the horizon over the second half of the year or coming into 2021? We talk all the time about what's happening between the United States and China right now, what's happening with the outlook for global growth in the US election as well. What's the biggest risk to global equities, in your opinion?
Well, I mean, certainly you've pointed out one macro risk surrounding what's going on from a fiscal and monetary perspective, and obviously, in order to revive economies, there's a lot of stimulus that's going into several economies, whether it's monetary stimulus or fiscal stimulus. The sustainability of that, obviously, is a cause for concern. Less so for some of the well-developed economies like the United States, but when it comes to emerging economies, then the extent of debt to GDP and those kind of things do matter in terms of sustainability, and so it's important that those are done in a calibrated way. Geopolitical tensions and what happens between China and the US and its impact on global trade has been talked about for a while. That continues to be a cause for concern. I actually also worry about the financial services sector because the volume of non-performing assets and what happens when underlying companies, particularly the small and medium-sized enterprises, are not able to get the financial support they need, or in fact, from a growth perspective and a demand perspective, if there is demand destruction, and there is demand destruction in several industries, and it's not clear when that demand will come back because it's largely dependent on consumer behavior. And that consumer behavior is contingent on what happens with the health-related issues in many of these economies. So, there is potential of an escalation of non-performing assets, both in the small, medium-sized enterprises as well as in the retail asset class, as far as banks and non-banking financial companies are concerned in terms of their lending activity. And so if the financial sector gets into difficulty because of the underlying problems with the real economy, that also is a cause for concern because the financial services sector is exceedingly critical for the overall health of the economy, and certainly when growth comes back, for funding growth. And if the financial services companies' balance sheets get impaired for any reason, that would certainly be a cause for concern.
Just final macro question for you, just while we're on this topic as well. Relevant for our friends in Saudi Arabia, oil prices. Are you concerned about the price of oil as it currently stands? I mean, tonight I'm looking at Brent crude, 45.24 US a barrel, WTI 42. Lower for longer oil prices. What's the impact in Saudi Arabia? What's the impact in India?
Well, I'm not going to comment on the impact in Saudi Arabia because I'm not really an oil expert. I mean, certainly the oil price is exceedingly important for Saudi Arabia as well as many other oil-producing nations. It's certainly a huge benefit for a country like India. So, where 70% of our import bill is related to oil, low oil prices is certainly a huge positive from an Indian economy perspective. But more broadly speaking, it's ultimately a function of demand and supply. And so, if there's going to be global slowdown in terms of growth, it's hard to make the case that oil prices will move up materially with global growth not picking up. And particularly when you look at, as I said, consumer behavior, if travel is not going to be picking up, if businesses are not going to be picking up because of underlying demand being slow, then it's hard to believe that in the immediate future that oil prices are going to necessarily escalate to any kind of level beyond the range within which they're currently trading. So certainly a positive for India and companies and countries that are dependent on oil and are not producing oil. But I'm pretty sure that the Saudi Arabian economy, or even for that matter, other Middle Eastern economies that are large oil producers, would certainly want a higher oil price because a lot of the domestic government expenditure and a lot of the domestic fiscal situation is contingent upon the oil price.
Vikram, thank you for indulging me. I appreciate it. Let's bring the conversation back to the markets and back to this question of derivatives in the situation in Saudi Arabia. Khalid, I wanted to bring it back over to you because, like your colleagues in India have done, Saudi Arabia is, of course, looking to create an investment ecosystem. Talk to me about that ecosystem and beyond derivatives, what are the types of products should investors expect to see in the years to come? And what do you think the next step is here? You touched on this briefly, but let's expand on this idea.
Sure. So basically, as I said earlier, we continue to develop this market, and we do this in a very gradual manner, making sure that the developments, these developments and offerings are really needed, and it is heard from the market participants, different type of market participants. What we always looked at it from perspective of making sure the infrastructure is there, making sure that our operations, regulations, and setup are supporting that development. Second is the demand of the market. So as far as the future developments are coming, since we, in 2 weeks' time, we will enable or activate our Saudi clearing house to clear the index futures. The next is to look at other type of derivatives. We're talking about single stock futures, index options, as well as single stock options, warrants, commodities. All of these are a natural development that the Saudi market will continue to have. Priorities will go always to the supply and demand. As an exchange, and I think as a regulator, and Abdullah here to confirm that, we have been very flexible to look at these developments from a regulatory and from a setup. And I think we also have been very lucky having very mature exchange members and APs participate in the market, from local well set up APs to an international APs that complement all of the developments we have. Definitely expansion on the region as far as cross-listing, primary listing from international markets. That is also in our priorities. Abdullah touched on a very important aspect of relaxing the access of international investors to the fixed income platform, which is an important also step that we think it will help our position in the future. So what I can say in top of that, the Saudi market is a leading market in the region. It will continue to develop itself. And let me conclude with this, Don. I think if you look at the main investment continents here, we're talking about the US or North, South America, Europe, Asia. This part of the world has been a little bit behind in many aspects. And we believe with being a G20 economy, being the largest exchange in this region, we would lead this region to the map and to the visibility of this connection between international investors across the globe, between especially Europe, Asia, US, Asia, and will compete in that domain with whatever it takes to the offering of the capital market side.
Thank you, Khalid. Rajiv, I wanted to bring you in on this because Vikram talked about product suitability. What products is HSBC bringing to market to take advantage of this opening up?
Well, as I said, we are leveraging upon the launch of the index futures to be able to provide this for our institutional clients, both foreign investors and the local investors who will use it to risk manage positions or indeed to be able to use it for taking positions on the forward view of the markets. Tadawul's been very good in, of course, they've established the credibility through many of these actions and in putting in place the required infrastructure and ecosystem for this project, but also being signaling about what other products are coming, and that allows us to have a much broader conversation with our investors, with the entire investor base. It allows us to be able to develop that as had been said. This is not it's not a day one game. It's a strategic situation where derivative itself will take a multi-year time to really pick up, but it adds to the building blocks and it gives credibility into what is coming. I think it's also interesting, actually, one aspect I will touch on in terms of the investor base and what they like. Normally, we are advocates that this is an institutional animal, largely, at least initially, but in Saudi Arabia particularly, a lot of ultra high net worth investors particularly play a much bigger role in the market, and they still get classified as retail. And then they do have an institutional mindset and expertise. So we may see some of that retail demand also come in and support the overall market even in this. Of course, subject to required suitability and due diligence as would be required. But touching back to the important point which Khalid raised right at the beginning, which is the local demand. We were talking about Saudi futures here. There are currently other markets where there is, particularly I'd talk about Eurex, where there is open interest in futures, but they do not have what Saudi will have, which is the local demand. And once this opens up strategically, this will actually open it up. And hence, even our investors would be interested in participating in this market because it will have that two-way flow, which is likely to develop.
Waleed, can I put the same question to you in terms of the product offering for the domestic market, but also the other issue that you raised earlier was liquidity and this issue of liquidity around the region. I think improving liquidity in the regional capital markets remains a key challenge here. So how do you address that liquidity challenge?
Sorry, I got disconnected a bit here, but if I understand your question, liquidity challenge, I think, will be addressed in time again, this is not a product that will attract a lot of demand initially. This is something that will gain momentum over time as the price discovery of participants in the market and as the market moves to, I think, more tools coming to support the futures market. Today, for instance, if institutional investor would like to go along the index, the opposite side will be short the index, or with the opposite side hedge themselves. I think there's a little bit more of work to be done on the other building blocks to allow the hedging tools for such positions. And then comes the importance of SBL and short selling. So again, as all my panelists have highlighted, and this is something really key for us as we face and deal with our clients, stability issues are very important. It's something that we take very seriously. I think the margining perspective is not granted completely to all class of investments. Similarly, the futures market demand a 10% upfront margin. We can apply different margin thresholds to various investors to ensure their protection and protection of the market at large. So again, gradually going into this, relying on heavily on suitability and safety initially.
Abdullah,
if I can add to that,
please.
Yeah, I think that's absolutely right. The word building blocks is completely correct. These solutions which are being brought on, starting with index futures, they increase the market depth and sophistication and gives investors more instruments. That by itself increases the accessibility as well as attractiveness of the market. And what you will find, again, over time, is not just the liquidity for the futures, but complementarily the liquidity for the cash market also increasing as a result.
Just a question to the panel on this topic. Does a rising tide lift all boats? If we see this situation being improved in Saudi Arabia, will it also improve the situation here in the UAE? Would anyone like to tackle that question?
It's a very sensitive question, Dan, especially for me at the exchange. But what I can say, the setup is a little bit different. If you look at the UAE, have launched both index as well as single stock options on the Saudi market, and that's give you a sense of the anticipated demand on the Saudi securities, even for an international platform like the Nasdaq Dubai. I would agree 100% with what Rajiv said. I'm very optimistic. The derivatives, the index futures, will definitely enhance the liquidity in the equity market. And if you look at the equity market since the beginning of the year, we're noticing a significant liquidity increase in the Saudi market for multiple reasons, and we could argue this for many. But an important element here about our index future contracts, we base this on MSCI Tadawul 30 index, which is in the perspective of the international investors in particular. This is almost 99% equivalent to the of the Saudi on MSCI Global Index. Where if you look at it from the passive investor point of view, this is clearly a fantastic hedging tool, especially these days, as Vikram was mentioning, whether the market reflects the future status of the economies around the world or not. So that will play a very an essential part. MSCI is a well-known global index. With Tadawul, passive investors will benefit from that. Now, if we look at the active investor side, this is where liquidity will take, in my opinion, a different angle. Some investors decided not to take a direct exposure for whatever reason, whatever strategy in the Saudi market area, the equity market. So derivative could be a very good tools for some active investors and their strategies to test that exposure to the Saudi market and align.
And just before we go, I would like to give one last word to Abdullah on a topic we haven't discussed yet tonight. And I think this is really important. It's something that Tadawul has worked on quite extensively in recent months. Abdullah, there's a whole new era of investors out there who have much higher expectations towards ESG and responsible investing. In your opinion, can Saudi Arabia be more ESG aligned in the future, be a leader in ESG across the region? And how is the CMA working with Tadawul on this issue?
Well, this is one of the very important areas, especially for international investors entering the new market. And we very much realize that. And the question always surrounding ESG is whether it is a regulatory requirement or a culture in the overall market. And the answer to it, it's more of a culture rather than a regulation. However, regulations should support and encourage such practices. And having said that, the practice we are adopting in the Saudi market is to put the governance requirement of the company where they disclose in the annual reports their ESG profile. And this is to encourage companies to explain their position toward that. In addition to that, there is development and work with our colleagues Tadawul to develop indices for ESG, and that is going to increase the activity and competitiveness between companies to adopt the practices. This is pretty much what's in line with the global practices. And of course, not to forget the role of the institutional investors to encourage their companies that invest in to adopt such practices. And one very proxy of the investors' appetite toward the ESG practices is the performance of the index, which is what we are.
Absolutely, very interesting.
You allow me, Dan,
sorry,
just brief.
Please go ahead.
Tadawul is working on two things when it comes to ESGs. In Q4, we will issue our guidelines for ESGs for all Saudi listed securities, which will be the first step to help Saudi corporates, Saudi listed corporates to adopt ESG standards. And sometimes they adopt, but they don't report these ESG standards. Second, we're working with MSCI to launch an ESG index based on at least 70 Saudi corporates based on MSCI standards. And that will be coming also Q4 or Q1 next year. So we're pursuing that area because globally we understand that ESG is becoming an investment requirements, and we don't want to be behind as a Saudi market.
Absolutely. Khalid, has that been announced before? Is that news for us tonight, the launch?
Sure.
There we go. Hey, that's exciting. Well, look, gentlemen, unfortunately, we're out of time, but we'll have to leave it there. I really appreciate your time tonight. I appreciate you sharing your ideas. And congratulations on the launch of this market. I'm looking forward to see what happens in the next few weeks. So thank you again for joining us. I really appreciate it. That's Khalid Al-Hussan, the CEO of the Tadawul, Abdullah Binghannam from the CMA, Rajiv Shukla, HSBC, Waleed Fatani from Saudi Fransi Capital, and Vikram Limaye from the NSC. Guys, thank you so much again. We'll look forward to speaking with you soon.